My name is Gerald Panneton. I'm Chairman and CEO of Gold Terra. I'm a 40 years experienced geologist, built 3 gold mines. I'm here at PDAC, where it's the largest conference in the world, I guess, with 25,000 people coming every year. It's nice to be back with the people. It's quiet this morning because it started at 10 a.m., so there's not too much flow, so at least we can talk. And I look forward to any question that you may have for Matt.
Gerald, really good to see you. I read the press release. I hear you're showing off some of the assays there on the shop floor as well. I look forward to seeing those. Perhaps you give us a little peek, could you?
I'm going to show you the core of our press release of last Friday, which is a confirmation of the importance of the Yellowrex North Zone, where we hit 5.3 grams over 6.5 meters. So what's very important is that I'm going to show you the core and the assays, because we brought it to the booth just in time for the PDAC. And what's important about this is that it's a confirmation of another zone near surface that could develop into a nice resource with more drilling. So far, we put 8 holes, and I think we're going to be adding a few more before April 15, which is the move out before the end of the winter. So here's a snapshot of that hole that is wonderful. Tell me if it's okay. You see
you need to come down. I'm looking at the top of your desk. Come down. Here we go. Come down more. Yeah. There we go. And more.
So you can see that all of these assays are consistent, 8 gram, 10 gram. This is not like one pop diluted or 6 meters. This is consistent from 4 grams all the way to 11 grams. Was that good?
That's good. Now, Gerald, tell me this, right? Because you said it's all very encouraging. What I'm trying to understand, because look, it comes off the back of a very difficult year for most companies in mining, where, quite frankly, some people were just, wanted to close the door, switch off the lights, and just go, "We'll come back in 2023." So your winter program has started. You've got 8 holes out. And made the announcement about 5.3 grams over, just 6.5 meters. But you focus on this kind of shallow zone, this zone between surface and 300 meters. What are you going after? What is the picture you're trying to paint for investors, and why should they care?
Well, they have to care because, the Campbell Shear is a shear zone that produces exactly 13 million ounces from one deposit, Giant and Con. What's very important about this hole that is drilled very near surface, it's the fact that this is the first hole of our drill program. We're confirming the zone. We were drilling just something like 25 meters from an historic hole that had 5.6 grams over 6 meters. So we're basically confirming the importance of the zone, the consistency, and not just that, but also, and I'm walking a little bit because it's hard to stand, but I'm in the booth at the PDAC, and what we're showing is that whatever we find at surface is a bonus. You can use a much lower cutoff grade. For example, if you're at surface and you can use the existing infrastructures and put the ram down as well, and we could be in business with 1 million ounces near surface. And the fact is that Yellowrex main zone that we drilled a lot last year, and we had a PEA a 42101 release in September, is identifying about 300,000 ounces, okay, at 8 grams. And the cutoff grade is 3.5, and it's near surface. It just shows that we could have some very nice satellite deposit along the Campbell Shear, south of the mine, north of the mine, and this is exactly our focus. And because the option with Newmont requires that we get 1.5 million ounces before we take over the Con mine option and the Con mine itself, where there's 650,000 ounces left at 11 grams. You can imagine, we get to 2 million ounces, you had 600, and we have a 2.6 million ounces deposit. Then you had the 1.2 million ounces we have to the north. We're a 4 million ounces company.
Right. So there's a kind of strategy here. You've obviously got to deliver against the Newmont agreement. So you're going after these kind of quick wins, which is brilliant, right? But you're talking, you make a big statement about saying, clearly this is very, very encouraging. But for us to be able to assess what it is that this zone has got, veining, alteration, mineralization, width are all very, very important. So what are you going to do to deliver against those things and be able to show the market?
There are no more mill in Yellowknife, okay? So we need a threshold of, say, 2 million ounces in the book to be able to sustain a feasibility study that will cost the project and have enough ounces to build a mine. You're not going to build a mill with 500,000 ounces. But I can tell you, Yellowrex main at 8 to 10 grams is valued at $500 million already at gold price of today. And so you can imagine that, using conservative pricing and everything else, it will cost $250 million to develop and mine. But if we had a mill in town, we would make $200 million. That's what grade does to you. What did I learn at Detroit Gold? I learned that it was very difficult to put a low-grade deposit in production. So my focus post-Detour was to focus on high grade. And what attracted me 3 years ago to Gold Terra and the 800 square kilometers property we have is the high-grade nature of the zones. Whether it's 33 grams over 3 meters or you're within the Campbell Shear, we do have the opportunity to strike very well along a definite, well-established shear zone, well-known by geophysics, geology, and tested barely north of town and with some great potential south of the Con mine. And that's our focus. Near surface, 8 to 10 grams. And if we go at depth below the mine, we need 15 grams. That's where the cutoff grade change. But whatever we do at surface can be put in production in the next 5 years and be in operation for the next 10. So this is definitely next to us. And with a current market valuation of $15 an ounce, this is a bargain. And when do you buy gold? When it's low, not when it's high. So jump in. I own 6 million.
Unless you're a major, in which case they like to go in when it's high. But for normal retail, sensible people, get in when it's low. Yeah, exactly.
Well, don't wait for the train to leave town.
Yeah, exactly. I agree, and I understand what you're saying. But look, you talk about a $500 million valuation here, but there's a ways to go. Like it was a difficult year for you and everyone else last year. You're sitting around what 35 million market cap, and you've got to be able to kind of fund this drill program to be able to prove out what you think about what's going on here, with the mineralization, etc. But also, with the way that this ore body is constructed. High grade is a really good start. Shallow is a really, really good start. But you're going to continue to need money to drill this thing out. So, what's the plan for this year that we can look forward to?
Look, unfortunately, for poor juniors that don't have any revenue, we need to tap on the financial market, make some smart decision, try to avoid dilution. We raised $4 million in November through a PP last year. We are marketing every day. We are doing our best. But the gold and silver sector is currently quite low in terms of interest. It's good pricing. I mean, anybody that's not making money at 1850 should go back to school or should do something better. But at the end of the day, this is an opportunity when companies' valuation, including the senior, are heavily discounted. So, even if the big senior are discounted, they also have a big problem. It's hard to grow. I worked for Barrick Gold for 12 years. We were mining 8 million ounces a year. Do you think it's easy to grow from 8 million ounces production every year? That means you have to find 2 tier 1 large deposit every year. 2 of them. Not just 1, 2. So you have to acquire, because there's no way you can explore. This is an opportunity for us to grow to 5 million ounces or more, high grade, with an infrastructure near Yellowknife. And this opportunity is right in front of us. Okay,
you mentioned your track record, and we've talked about it on numerous occasions in the past with regards to Detour, with regards to your experience in the gold production space, a gold development space. You did a few things last year which you'd think in normal circumstances to get kind of elicit some kind of response. You talk about recovery rates of 92%, and you didn't get much of a reaction. You put out an initial mineral resource estimate. You didn't get much of a response. You've been able to raise money, thankfully. Yeah, the market sucked, right? Let's just put it mildly. The market sucked. But did you learn anything about last year which you're taking into this year, or are you relying on your previous track record? Adapt. Okay, there you go.
Adapt to the market. Cannot change the market. Look, I built Detour Gold in one of the best gold timing I could have dreamt of while building Detour. Could you build another Detour today? No, you couldn't. You would need $3,000 an ounce. Look at Côte Lake disaster. So in my mind, it's not being critical about other projects, but I know that from my philosophy and for our shareholders, as well as newcomer investors, for me, high grade is easier to manage than a low grade deposit. And that's what my focus is. And I think there is the scarcity of high grade deposit. How many of them are in Canada? There's somewhere in the world there are others, but they don't make the cut for a Newmont or a Barrick because it's too small. Because if you produce 4 million ounces, you need 10 to 15 mines that will give you 300,000 to 400,000 ounces a year. So this is a project that will be nurturing. It's perfect for a small junior or a small producer producing 150,000 ounces a year. That's roughly our target, being a 150,000 producer, combining the Con mine, building a mill near Crestaram, where we have an open pit at 6 grams, 300,000 ounces. You combine those two together, you're 150,000 ounces a year in the first 6 years. That's very nice threshold.
It's very nice, and you're painting the picture. You know what the majors want. You know what is attractive to them, and you've got to go about putting those things in place. So I've got to come back to the money question, which is, yes, you raised just under like $4 million.
We're just advancing. If the money supply was not an issue, and the stock price was not an issue, I would probably spend $10 million this year, or 15, or 20. But we have to move and adapt to the current market. I just came back from BMO conference. People only talk about lithium and rare earths and critical minerals. That's all they talk about. We have a wonderful property covering 800 square kilometers. This is going from Timmins to Matheson in Ontario. It's a huge property, and we have barely nobody. So there's a lot we can achieve with the gold prospect, and we're just going to keep moving the project slowly than we'd like to, but at least surely, and with very smart drill program.
Okay, so you got to be smart. You got to be frugal and careful with how you spend your money, allocate your money. So, is it just all about the drill bit? Are there other things that you need to do this year?
Keep the drill bit. Make sure that you add ounces. Do another 42-101. If we find enough ounces this year and we drill enough, we will go back and basically raise more money, do more program, and hopefully we drill all the year long. Currently, our 8,000 meters program is stopping at April 15. We'll move out, and then we'll consider doing something to bring back the drill during the summer. We already have our permit to build a permanent road. We didn't have time to do it last fall, but there's still time to do it. And we also have our target at depth that you should be keeping an eye on. If we do it, this is a very good target because we could find 2 million ounces below the mine. That's how big that target is.
Right. Okay. Okay. So we're very clear about what you think is important to deliver this year. So let's just talk about the mood of it, because you said if you can't make money at 1850 gold, you should maybe change profession. I tend to agree with you. But what did you pick up in Miami? What did you pick up in Miami? And I know it's only officially day one at PDAC, but what are people talking about in the context of the gold market?
They are very little interest. Look, we have a nice press release. My shareholders are very happy with the progress of the project. They're not jumping ship. They like what we're doing. One of our biggest shareholders, which is McKinsey Fund in Toronto, supported by very good technical people, we're very happy with the 500,000 ounces. And the focus is to find 1 million ounces in the surface. And that's what we're doing, trying to define another zone and trying to continue those zones at depth. This project has potential for 3-4 million ounces. It's just a question of time and money.
Okay. Well, Gerald, I really appreciate you making time for us from the shop floor. It looks a bit quiet there at the moment, but it's gonna get busy. It's one of the biggest conferences globally. I look forward to catching up with you maybe after the conference, just to hear, get your view of how things are, what the mood of the nation is, if that's okay. So good luck.
Thank you very much, Matt.